Do you see Disney Netflix as one of the best fundamental pair trades in your space? It's definitely up there.
Yeah.
I mean, I think the fundamental setup on the short side for Netflix, especially over the next 3 to 6 months, I think is really great for the short. And likewise on Disney being long, I think just Netflix is massively overowned and Disney is massively underowned, and one is accelerating and one is decelerating. So just keeping it really simple in terms of the process. Like I want to be long Disney, I want to be short Netflix.
That's been a good one.
Yeah,
Good.
I think
Not bad for a rookie.
Hey, we'll take it.
He's not a rookie. He's just a new publishing sector head. He's obviously been born and bred at Hedgeye, which has its perks. He's got the bear side
yeah.
too.
I mean, you kind of understand the process and just go with it.
But even if Netflix wasn't slowing, what would happen to the stock in Quad 4?
Down.
How much was it down in the fourth quarter?
I think it got cut in half, like 30-40%.
Down 30 to 40%, and if Reed Hastings, alongside his insider selling of $20 million at a clip, called Freebird and said, "Hey, look, we're going to beat the core. We're going to have a better number," which they actually did. You still would have lost money, 30 to 35% in the stock. Quad 4 will kill you, no matter what you think knew, or will know.
Well,
okay?
to that point, I mean, Josephine, if you have the stock chart up with the stock price correlating to high yield spreads.
Yep.
What we basically saw when we were in Quad 1 and Quad 2 for the first half of 2018 is that, Netflix was levering up and the stock price just ripped. There was no correlation. And all of a sudden, boom, going to Quad 4, you had that, risk and volatility phase transition, and the stock price all of a sudden just becomes essentially correlated right to high yield spreads.
Yeah.
At the same time, they're 3.5 times levered net debt to EBITDA, taking on more debt, negative free cash flow, and that correlation has been really high. And what have you seen in the past 2 or 3 days, right? Like high yield spreads have come in, high yields rallied on hopes of the Fed, right? But now, going forward, it's like, if we go further into Quad 4, this is going to get cracked. This is going to crack, and the stock's going to.
And the most important difference versus the last bubble that I got you out of, if you're with me as an investor back in 2000, 2001, 2002 on the short side. And again, most of what we're saying here, at least we're the only place that got both turns right at the peak of both of those tops, 2000, 2001, and then 07, 08, and now this one. Netflix is different than that tech bubble back then. Tesla and Netflix, think about it. They're two companies, story stocks, loved by the GURBs. Those kind of stocks, like your dumbass broker is long it because he likes it, because he uses it. Like those are the dumbest people out there, right? They think that a chart, and they would actually look at that chart one more time, they say, oh, that's a bullish chart. And they wouldn't know that it's credit spreads, right? So they're like, that's bullish, right? It's going up. No. The difference now with story stocks is that they need leverage. So again, Tesla is a levered pig, okay? Leverage. Leverage does not do well when credit spreads widen, okay? And Netflix needs to fund their content with what? Debt. Leverage, okay? If they don't have the debt and they can't issue the debt against that stock price, they're not going to have any good content, okay? Or at least they're not going to have the kind of content they have to pay for right now. And I'd argue that their content actually is getting worse.
Yeah, well, and then Josephine, go to the app download slide. I mean, so you just described it perfectly. At the same time, when we're tracking the data that we're tracking suggests that what's happening, like they're taking on debt at the same time we're going to Quad 4, at the same time that it looks like subscriber growth is decelerating massively post these price increases.
Yeah.
That's just not something that you want to be long at 55 times EBITDA. With decelerating growth and high leverage, it's just a recipe for disaster.
Now the GURBs would even understand that chart.
Yeah.
The brokers out there would get it. They would get it, right? So at the end of the day, like who has a nowcast of mobile app downloads? We do. Why? Because we're an independent research firm that pays a lot of money for smart guys like Andrew Friedman to do real work. It's called real research. And that's the difference here, as opposed to people like the Nigerians bloviating about what they think about, well, I like that company. I just used the site today. I mean, I hopped up like these big, I really like that stock. Oh yeah, I think that's going to work. Like that is so dumb. I mean, somebody said to me the other day, did you say numb? Because you shouldn't, in this day and age with everybody wanting to be perfect or perfectly average, you can't call somebody dumb. No, I didn't say numb. I said that's dumb. Like, it's like two gorillas bouncing around telling you that they're the greatest traders on earth. It's crazy. I mean, But those are the kinds of the shareholders of these stocks, whether they be the FANGs, which would obviously include Netflix, or Tesla for that matter. They're locked and loaded with people with fundamental beliefs that have nothing to do with real research and or numbers.
Yeah, and look, part of the process, right, is if that chart, flip it upside down, if the data starts accelerating and it doesn't line up with my fundamental catalyst, like guess what? Like
Then you're out.
just like if
Just swerve me out.
like if GDP and the macro data starts getting better, like you switch, like you pivot.
100%.
It's
Do you think in my wildest dreams I give a damn? Like literally. Like I don't give a damn if I'm long Disney or Netflix. I want to be wrong. I want to be long the right one and not wrong. I mean, that's what I want to do. We have no bias, okay? Zero. All these other guys, they have biases, and actually in some cases their bias isn't that they're banking the company, it's that they actually don't have a model for the company and they're completely unaware. They're just talking.
They're just
talking
selling
and talking.
stories, and they're on Twitter, and everyone's like confirmation bias,
Yeah.
and it's all behavioral, and
Yeah.
then all of a sudden it's like, oh, they print the number. It's like, oh, that happened. You know, it's just.
And that's actually what's really the worst thing in quad 4 is when you miss a number.
Yeah.
And that's not what people are talking about this week. Everybody's like, buy stocks, you know, the Dow's up 900 points, you know, whatever they're saying. But what you really want to do is get ready for the next earnings season. Because if Netflix misses, it's not going to go down by a little bit.
It's gonna go by a lot.
Yeah.